Hello, this is Alex Haigh with eXp and the Haigh Group of the Treasure Coast. Today, we're going to talk about what happens if the interest rate goes up while you're under agreement. Stay tuned for that. All right, so there's a lot of talk out there about interest rates going up. Now, most likely interest rates are going to continue to go up. This is as a result of the Federal Reserve raising interest rates to lower or combat inflation, which is a whole nother episode that we did. That being said, the Fed has said, or the Federal Reserve has said, that they will continue to raise interest rates as the year goes on and maybe even to 2023. So with that in mind, what happens if you are under agreement and all of a sudden the rates go up? Now remember, if the rates go up, your cost of your loan is going to go up, right? So you're going to be able to actually, the same amount of money that you leverage is going to cost you more. So, couple things that you want to consider. A, the interest rates most likely are going to go up. So that's number one. Most likely interest rates are going to go up. Number two, ask your lender, will they do a rate lock? Now, a rate lock is, okay, we're going to lock in that rate. No matter what interest rates do, you are locked in at that rate. Great. So interest rates go up. You don't have to worry about it. You're still going to have that same payment for the amount that you got leveraged, and you're going to be within your budget, and everything's going to be hunky-dory. Now, the third option that you have is something that really hasn't been talked about out there, and I really want to bring this to the table because I think it's hyper valuable. Now, that's called a float down option. Now, what is a float down option? Well, a float down option is that you lock the rate, and then if interest rates continue to go up, you will be locked in with that old rate lock that you had for number two there. Well, what happens if interest rates go down? Well, if interest rates go down with that float down option, if interest rates go down, you can actually capture that interest rate as it goes down. And it's not always something that will happen with the Federal Reserve. It has to do with the bond markets and all that kind of stuff. But ultimately, you want to see if your lender will do that float down option so you have peace of mind like, well, I don't want to lock because what if they go down? Well, you got that float down option is a really great way to kind of protect yourself from the upside because you're locked and to give yourself the benefit if the rates actually start to go down or your rate goes down. A number four that I would throw in there as interest rates go up, ask your lender if you can buy down your rate. You kind of want to have that in the back of your head because you can get actually seller concessions, money from the seller at closing to actually pay to the bank, and they will actually lower or you can buy down your rate. So that's really your fourth option in there. I know it's not, kind of like, I think it's a great option. I think that fourth option is something that you want to have in the back of your head because if you can get those seller concessions, you have a great agent that's out there and you're making different offers. You could go in with, after you get under agreement with somebody, you could say, hey, you know what? What if we could raise the price by $10,000 and get a seller concession of $10,000? Would you guys be amenable to that? Or you can go in with that offer of, hey, we want it to be at this number, but we want $10,000 back at close because that's going to go towards your buyer's closing costs and prepaids, which are the closing costs can be to buy the rate down. So I hope that those four options are helpful to you as this interest rate situation is going to continue to move on. Most likely, again, they are going to go up. So you want to really be prepared for that with that rate lock and that float down option. And then remember, you can always buy the rate down. Oh, well, you can't always. I'm not a mortgage broker. I just play one on TV. So at the end of the day, take a look into that, but really be talking to your lender. And then you want to have a great agent that understands the market to help you navigate that as well. So I hope that was helpful. Stay tuned for the next episode. Until then, be well.